Good morning. Welcome to IG's early morning call. Let's take a look at the headlines as we start you out on the trading day on this Tuesday, 27th of February, looking for a slightly lower start across the European markets, especially here in London after the UK retail scene has received some more evidence of what's happening there from the British Retail Consortium, showing that British shop prices rose at their slowest pace since March 2022. Meanwhile, late last night, we saw shares of Zoom jump 10% in the markets. Once again, it's all about artificial intelligence as the company integrates AI into its products. And that seems now to be paying off. And the crypto rally sending Bitcoin above $57,000 for the first time in more than 2 years. We've got a number of companies surging on the news, including Coinbase, and many others surging on the session late yesterday. So money going back into some risk assets as a result of that, coming out of volatility, as you can see here, third day in a row of losses. The markets at the moment showing losses at the start of today's session. This is the daily chart for the London FTSE 100, which we know has been an underperformer. Yesterday, we saw a relatively hefty day on the way down. Concerns once again about the outlook for earnings. This time it was the Competition Markets Authority hitting house builders yesterday after concerns and inspections for the sector to check to see whether or not there's been any collusion on pricing. So second day in a row of losses, looking for a lower start at the beginning of today's session. Now, as we look at what's been happening on the European markets, German DAX yesterday, intraday trade, showing yet another all-time intraday record high, this time 17,464. The market's not looking as though we're going to get much change on from the close as of last night. Same sort of price action we've seen in the French markets. Yesterday, if anything, slightly weaker than the German DAX, but we saw a new record high on Friday, as you know, at 79.78, pulling back for a second day in a row, looking for a slightly lower start on the French CAC 40. Just one stock I wanted to highlight, and that is Ensilica. It is a London-listed stock. It's a penny stock, or rather, was a penny stock. Yesterday, we saw this stock up 27.7%. This is one of those stocks that's really been adding a lot of weight recently as a result of its expectations that it's able to provide more movement within the AI sector. It's a chip company based here in the London markets. Let's take a look at what's been happening overnight in the Asia Pacific markets. First of all, in what's going on in Japan. Little or no move on what's been a mixed session overall into session today. Same sort of thing for the Hang Seng Stock Index. Not much more to be said on the Australian markets, with the S&P ASX 200 up on the trading day. There was a negative day across Wall Street in yesterday's session after the recent record highs that we've seen. Not a massively negative day, it has to be said, but one of those days where there's been a little bit of a regrouping around some of the record highs that we've seen for these markets. I want to show you what's going on first of all. The Dow You remember we saw an intraday record high on Friday at 39,285. Yesterday, down a little bit. Today, we've got a little bit of interest buying, but it's not a lot. But the bottom line is we're still holding on to the recent gains. And I wouldn't be too short on any of these markets, it has to be said, despite the fact we saw a second in a row of losses yesterday on the S&P 500. That market moving away from the record high at 51.11 that we saw on Friday, moving down to 50.71. Again, like the Dow, holding on to the recent gains. And the bottom line is, again, wouldn't want to be too short on any of these markets. That new record high that we saw yesterday intraday on the NASDAQ, 18,095. That now taking the NASDAQ up to a 7.6% gain for the year overall. Yesterday it was a negative day, as we've just seen. Money going into the markets at the moment at 17,933 after those Zoom results last night. Saw that stock up 10%. I'll give you some more details on Zoom in just a couple of moments' time. But I want to take a look at some of the economic data that we've seen out overnight. First of all, in Japan, we've seen the latest inflation data, keeping alive expectations that the Bank of Japan may move to tighten monetary policy come April. Consumer price index surging, or rather rising, I should say, rather than a surge, rise by 2.2% in January, year on year, slowing for a third straight month. Core consumer inflation, which excludes straight food, also slowed for a third month in a row in January. The core rate, that the Japanese calls it, favoured reading by the Bank of Japan because it excludes fresh food and energy, slowed for a fifth straight month, down to 3.5% from 3.7% in the previous month. I want to show you this chart, which is the dollar-yen chart. I was talking about this as a possible area of volatility when we saw this data out today. And it really hasn't moved an awful lot. It remains above the 150 level on news that the slowdown in pricing was due in part to a big drop in energy costs. But all this leaves the prospect of the Bank of Japan possibly wanting to start to restrict monetary policy come April. Now let's return to one of our headlines and talk about what's been happening with pricing across British shops. The British Retail Consortium has released data out overnight showing that prices have risen at the slowest pace in nearly 2 years, according to the BRC. Let's take a look at those numbers, because inflation slowed to 2.5% in February from January's 2.9%. This is really good news for the Bank of England. This is the smallest annual increase in rates since March 2022. The drop was driven by a weaker growth in food prices, which rose by 5% year on year, down from a 6.1% rise in January. Helen Dickinson, she's the chief executive of the BRC, said that easing supply chain pressures have begun to feed through to prices, food prices particularly, but adds that significant uncertainties remain as geopolitical tensions rise. Now, we've seen the dollar down for days now, and this has pushed up sterling. Sterling is rising in today's session. Bottom line is this data out today shows that inflation pressures are easing, which will be welcomed by the Bank of England. Still, according to the markets, is looking as though it will end up cutting rates possibly August this year. Meanwhile, we've seen GfK consumer confidence numbers out in Germany rising, still a negative figure, but rising to a negative 29 from a negative 29.7 in February. This is pretty much in line with forecasts. Before I take a look at what's happening with the dollar and the euro particularly, let's take a look as well as what's been happening anecdotally as a background to the US interest rate picture. And the Kansas City Fed President, Jeffrey Schmidt, made his debut speech yesterday on policy and signaled that high inflation remains his main focus. So let's take a look at a quote he came through with yesterday. With inflation running above target, he said, labour markets tightened, the bond showing considerable momentum. My own view is that there is no need to preemptively adjust the stance for policy. That is, the Fed keeps interest rates hold for as long as it dare to make sure that we've got all evidence of any inflation eradicated from the economy. Let me show you what's happening with the dollar basket, which is now dipped below the 200-day moving average. Below this line here, I've got on at 103.96. You see it's an area of interest for all this. And it's now below that. That means that the picture for many Fed watchers is that other central banks are likely either to hold on to interest rates longer or, in some cases, still potentially move them up. Other Fed policymakers in recent weeks wish to keep the policy rate in its current 5.25% to 5.5% until they have greater confidence that the Fed is over inflation seems now to be a dominant message. Looks like the Fed may cut interest rates come June. Certainly what the Fed or what the markets are suggesting are on federal funds futures markets. A few economic data to watch out for today in the US economy. Got goods orders and the consumer board consumer confidence number out at 1:30 p.m. today. The durable goods figures likely, according to economists, to have dropped by a margin of 4% in January, month on month. And at 1:30 at the same time, consumer confidence seemed rising to 115 in February from 114.8 in the previous month. Promised you what's going on in other areas of the foreign exchange market. With that falling dollar, we've got the euro trading at levels not seen since the beginning of February. This little trend seems to be in place now. If I was long, 108.58, I'd put my stop underneath a 2-period moving average, possibly below the 108 level, actually, with a view to taking this further up. Price targets. One of the first price targets were the highs we saw back on the 29th of November at 110.17. And then thereon from that, it's this high up here at 111.39 is the longer term picture, which is the highest point seen for the euro against the dollar since July last year. So certainly seems like there's this nice little move underway for a long euro dollar trade. Take a look at some of the corporate news headlines we've seen out at 7 o'clock this morning. Not particularly good news for the asset manager Abrdn, or Abrdn. It's released its full year figures for 2023, reporting that revenue was down 4% to £1.398 billion. Pre-tax loss of £6 million, adjusted EBITDA 249 million. Full year dividend 14.6 pence. Abrdn has been getting some bad headlines recently. Let me just show you this in the context of the share price chart. This massive loss that we saw back in July last year. Firm stock price down more than 70% since its peak in 2015. Since the start of this year, it's down 9%. The Financial Times recently reported that Harris Associates, a high-profile shareholder in the company, sold its position, saying they'd lost faith in the management. Abrdn announced a £150 million profit savings program at the end of January, which around 500 jobs would go at its parental leave, and its parental leave allowances and redundancy pay would scale back. All this pointing a rather sorry picture for this Scottish asset management company. The stock will open at 161.7. If I was short on this, I'd put my stop above the 165, with a view to taking down to possible 159.7. Staying on the charts, let me just quickly update you on what's happening with companies. One of them is Smith & Nephew, the global medical technology company. Fourth quarter revenue up 6.4% to $1.45 billion. Full year revenue up 7.2% ahead of guidance, reported growth of 6.4%. It was after an 80 basis point foreign exchange headwind as well. I think things are looking particularly good for this stock, potentially at the start of today's session. And if I was long at 1123, stock goes underneath this underside of this rising line of support around about the £11 level. No change in full year dividend to 37.5 pence. If you're long on this, your price target is around this level up here, around about the 1170 level. Meanwhile, the world's largest reinsurance company, Munich Re, has come up with figures this morning and showing it's benefiting from a hardening of rates across the insurance industry. It's posted better than anticipated fourth quarter figures and also an upbeat profit outlook. Let's take a look at the figures that we saw from the company this morning. Net profit falling 12% to billion, beating expectations of 988 million euros. This takes Munich Re's net result to 4.6 billion in 2023. The group now anticipates net results to rise to 5 billion in 2024. Now, Munich Re, as I said, has been benefiting from this uplift and hardening in insurance rates around the world, driven in part by what's been going on with some of the clement weather, which has produced all sorts of problems for the insurance industry. But what happens when you get problems and you get large amounts of claims? What happens is you end up getting a hardening of rates, and people just have to stomach them. If you've recently insured your car or house or business or whatever, you'll notice that rates have gone up considerably. This is partly due to the poor weather and the large amount of claims. But also for example, the insurance industry for vehicle insurance, there's a lot of theft, a lot of criminality amongst the claims industry, not the industry itself, but people making claims. And the insurance industry is reporting that it's becoming a real problem. So it's what's happening is that rates are going up, and companies are benefiting from that. That's a record high for Munich Re as of yesterday's close. Zoom video communication shares jumped more than 10% in extended trade on the IG platform late last night after the company reported fourth quarter earnings. Let's take a look at the figures as we saw them break. Adjusted earnings per share beating expectations, reaching $1.42. Analysts anticipating $1.15 per share. Revenue standing at $1.15 billion, beating an estimate of $1.13 billion. Zoom's efforts to integrate AI into its products and diversify its portfolio have now started to pay off as it takes advantage of a surge in the hybrid working. Let's take a look at the share price chart. Long term, there's been this massive degradation of value. The highest we saw there back in July 2021, it's even higher than that earlier. That was at $406. As of last night's close, we ended at 69.67. Look at the big gains we saw in the share price last night. This on news that Zoom introduced its AI companion, and it's now benefiting from that it said it introduced that back in the third quarter, allowing paid users to access new features, including meeting summaries, email, chat, composing prompts. The Zoom AI companion has over 510,000 accounts now enabled it in the past 5 months. In terms of outlook, Zoom forecasts fiscal 2025 revenue of around about 4.6 billion. That was below analyst estimates of 4.66 billion. And you can see the shares ended off the highs. At one point, shares traded levels not seen since the 2nd of January this year, but ended off the highs at 69.67. All sessions on the IG platform. Now, eBay will be looking to get across its results later on today. Wall Street expects the online marketplace giant to post earnings of $1.03 per share. Revenues expected to come in at 2.51 billion, which will be a 0.2% drop from the same period last year. Active buyer base is what analysts look at. Is expected to stand at 132 million, which would be a decline of 1.5% year on year. Gross merchandise volume also forecast to marginally decline to just over $18 billion from $18.23 billion this time last year. Let's take a look at some other earnings out later on today. Just 3 companies of note to watch out for. I won't go into their share price chart, none of which all sessions, American Electric Power, Virgin Galactic, and Urban Outfitters. What I do want to do, though, is to take a look at some other areas of the market where there's been some interesting moves on the session. I want to show you this chart here. This is Bitcoin. You remember Bitcoin had that massive loss between the record highs, almost $70,000 back on the 9th of November 2021, down 77.6%. Since the lows, we've seen a 268% increase. And as of the intraday trade today, it's the first time past the 57,000 level that we've seen in almost 27 months. 56,090, which is where we stand at the moment, gains for Bitcoin, helping a lot of those other companies that trade as these proxies for Bitcoin. If you can't trade such as Bitcoin, you can get an opportunity here. This is not the session stock of Coinbase, up yesterday there to levels there not seen this market since April 2022. Staying on the charts, just wanted to wind in a couple of areas of the market just for you. Just taking a look at what's happening with crude oil. Both US crude and Brent just trading around the 200-day moving average. This is US crude secondary gains there. And the price of spot gold up in today's session. We've got that weaker dollar driving gains in dollar-denominated gold after yesterday's pullback. This market now at 20.35. That's it from me. Watching out for those European stocks at the start of today's session as we wait the opening trades at the top of the hour. Looking for losses across the markets, especially here in London. Once again today, Abrdn does not look particularly happy. Smith & Nephew might be an upsider. And after those record highs yesterday for Munich Re, do we have any more legs in the stock to go higher on yet still? After what's been some good earnings out from the company this morning. We're back at 10:30 with Charting the Market.